The stock market has been rising and the general population has become more risk adverse. They are investing in paper assets like stocks and to a lesser degree bonds. People are using their savings, or in some regions, they are refinancing their home, which has risen in value, pulling out the equity to purchase other items. So much debt has been accumulated and it's all ripe and ready for the next person to ride this wave. But will these people find themselves in quicksand? You came here for the truth, so let me unveil that for you. I have a very big video for you today, something that I have been planning and preparing for quite some time because I see the same mindset in so many people. And many people's livelihoods, everything they've been working for is all riding on what's happening right now. So today we are going to discuss something that I believe is extremely important. It's going to take a little bit of time here, but I'm trying to condense it into a short period of time as possible. Let's get into it right away. Beginning with this. This is from yesterday at the time of this recording. As you can see, stocks making new highs. Obviously, this has been the case for a little while now, and you can see stocks breaking new records or they're at new highs, and you see individual corporations which have been doing very well. In this case, you're looking at the tech sector, and this has been going on now for a little bit of time. Particularly, though, the tech stocks have been doing very well. So more people are just throwing their money in, and you see the valuations. The next $1 trillion company, who will it be? Who is going to be the biggest stock today? More money, it's all being thrown in. But what's happening behind the scenes? Let's cover the nitty-gritty. Let's get into it here. What we are seeing here, an article from the Wall Street Journal. The reason behind why central banks are buying stocks. So wait a minute. You're telling me that we never hear about this in the mainstream media, as in like front page news. You don't hear the financial analysts talking about it. Nobody's really talking about it, although it's an admitted fact. It gets admitted in the Wall Street Journal. It gets admitted everywhere. Yet, you don't really hear that that's the reason why stocks are rising. This is one of the primary reasons, not a secondary reason, but a primary reason. There are several forces driving this. Part of it is a hunt for higher returns because of the negative rates. Nearly $11 trillion, or roughly 1/4 of global fixed income assets yielded nearly or below zero, at the end of 2016. Below zero. So you're going to get a negative interest rate in this $11 trillion worth. That's a quarter. You're going to get zero returns or less. Think about that for a second. Now, obviously, these central banks are going out there and eyeing better returns because, of course, they're a business and they want to create more profit. Just like any business, a central bank does that, except the only difference is that a central bank can print up money and buy those shares. It's a wonderful system that they have. And essentially, that's all I wanted to mention for this. Central banks buy shares, push up the stock market prices. And we know that here. You can see equities. This is basically talking about the central bank reserves. They have been increasing the amount of equities they have been purchasing. You can see that right now at this time in 2017, central banks around the world are printing $200 billion every single month, and they are buying various things. One of those things is in this next chart showing you the Bank of Japan buying up. Can you believe it? If you see this right here, I mean, the totals are essentially two-thirds of ETFs are owned by the Bank of Japan. And that should show everybody how much these central banks are buying. When all of Japan, practically all of Japan, is owned by the government, you know you have yourself a very big problem. But don't worry, because every financial analyst, every financial planner, everyone who studies this is told over and over again that this is the reason, the Bank of Japan, or I should say Japan in general, is the reason why printing money works. And I beg to differ. Let's move on to the next one. If you are brave enough, if you have the guts, if you feel that the stock market rising is the reason to put your money into it, then have the guts to invest in the Venezuelan stock market. It is booming. It is going crazy. Look at this. Just since January 2016, the prices are going astronomical. And then when you zoom out on this chart, it's even crazier just over the past few years. And why, if you're looking for good returns, why wouldn't you invest in the Venezuelan stock market? You're talking about all-time highs right now in April 2017. And guess what? The price is probably going to go higher next month and probably going to go higher the month after. There's a lot of risk there. But if you're looking for the numbers to go higher, then just dump your money into the Venezuelan stock market. Have the guts. If you're one of these individuals who wants the markets to go higher at a rapid rate, please, by all means, do so. But of course, for those who are still with me, when you devalue the currency, asset prices will rise. They will not rise in a linear and neat and clean fashion. They will rise erratically. You can't decide what's going to rise, but I assure you, if you devalue your currency by printing it, things are going to get more expensive. That's what's happening here. When you use a central bank that can dictate the amount of liquidity that is in the system, they will determine what assets are priced at. They can't specifically say necessarily, but they can decide if something's going to go up or it's going to go down. This right here is in quotes from 1929. As you can see, in late October, Wall Street loses 11%, 13%, 12%. Huge drops that occurred. And yet, in around that same time frame, you see quotes like this. And of course, looking back on it, we can laugh. There is no cause to worry. The high tide of prosperity will continue. Sure. Stock prices have reached what looks like a permanently high plateau. Absolutely not. The crash is not going to have much effect on business. I have no fear of another comparable decline. And so we know what happened after this. That in 1929, it was just the beginning. And if you go to this page, you can scroll down and you'll see the ones from 1930, 1931, and basically the same thing. People will deny it the whole time. You're never going to hear it from the government. You're never going to hear it from the financial analysts. And you're especially not going to hear it from the people who have heavily invested into this. You need to be brave and you need to realize on your own where your savings should be. If you think that's the stock market, then you have to be aware of what's going to happen. You need to monitor it and you need to take full responsibility. That's all. You can't be the one to then decide in the future, it's somebody else's problem. No, it's your own problem. Whatever decisions you make, you need to be responsible for them. When we look at asset prices rising, we need to understand that it's not just the assets, all the things that you may be invested in that are rising, but it is the daily expenses. And in this case, you have household electricity, business electricity, household gas, and business gas. So essentially our energy prices. And guess what? They've been rising, and they have been consistently rising. But this is only in the US, right? This is only in Australia, right? No. This chart here happens to be from Australia, but you can see that in the UK, the same problems are rising. npower changes domestic standard energy prices, impacting around 50% of customers. So guess what? A lot of people all of a sudden have to pay more. And do they send you a warning 10 years down the road? Do they give you some sort of, willingness to pay at a later date? No, you get the bills and you have to pay them, or else the creditors come for you. And even when your government generates a surplus of energy, your prices never go down. That's just the way it is. SSE to hike electricity prices, adding £73 a year to bills. Should this surprise anyone that electricity and energy prices and food prices continue to rise? Absolutely not. And it doesn't surprise any of you, I know that, because every time you go to pay your bills, they are higher. So what's happening here? They told me that there is no inflation, or next to no inflation. Then why are all of the bills getting more expensive? Why are the houses getting more expensive? Why are the asset prices rising? Why is everything getting more expensive, yet you're telling me that inflation could be anywhere less than 2%? What exactly, other than our wages, is getting this level of inflation that they're claiming? I don't get it. With food prices rising, middle-class Canadians say they're feeling the pinch too. It's not just those in poverty. Of course, they are the ones that suffer the most when food prices rise, but it's everyone suffering. And that's a fact. Here it is in this article here: Canada, the US, you're looking at the UK, you're looking at Australia, anywhere. It's affecting everyone. Please click on the link in the description for part 2 of this video where I tie it all together.